It's the final one for the week, so it's safe to say, thank God, it's Friday. Good morning and welcome to Business Morning on Channels Television. I'm Ini John Mekwa. Let's start out with happenings in the oil space. Oil prices drifted in a narrow range on Friday, on track to their biggest weekly gain since late August, as the easing concerns over Omicron coronavirus variant on global growth and fuel demand drove market sentiment. Benchmark Brent and WTI were both on course to rise more than 6% this week, even after a brief profit-taking, their first weekly gain in 7 weeks. U.S. West Texas Intermediate crude futures gained 2 cents to $70.96 a barrel, while Brent crude futures slipped 6 cents to $74.36 a barrel after falling 1.9% yesterday. Prices are under pressure as China's domestic air traffic, once the world's envy after a fast rebound during the pandemic, is faltering amid a zero-COVID policy that has led to tighter travel rules in Beijing and weaker consumer confidence after repeated small outbreaks. Well, still around the oil space, Petroleum Congress, the organization of petroleum exporting countries, says that investments worth $11.8 trillion will be required between 2021 and 2045 in the upstream, midstream, and downstream oil sectors. This, according to OPEC Secretary General Mohamed Barkindo. The return of investment is to bring about balance and stability to the market since the outbreak of the pandemic in early 2020. Mr. Barkindo explains that if the necessary investments are not made, it could have long-term implications, particularly for security of supply. And as the world continues to push the agenda for sustainable energy transition and security, the Group Managing Director of the Nigerian National Petroleum Corporation, Mr. Mele Kyari, says that the National Oil Company is focused on building more partnerships, which he describes as a key aspect of the oil industry's operating model. The NPC boss says that the new Petroleum Act recently passed in Nigeria as the country's renewed commitment to attracting investment to the sector. The act, according to him, provides the needed improvements in fiscal and governance framework, emphasizing transparency and accountability, which is key requirement for partnership that engender growth.
Struggling with the fiscal environment in Nigeria, issues around when investors put their money, can they get back their money with the returns that they deserve? And would there be fiscal stability and also sanctity of contracts? I think this is what our new law has done to bring all this on the focus, to ensure that the fiscal environment is very competitive, world-class, global, best of place that you can find, and also to bring in the stability and the security of contracts, which is what's really very critical for our business. And ultimately, what this will do is to bring partnership on the table. We have very robust partnership today working for us. We're looking forward to much bigger ones. But the promises are very clear. Partnerships are now required for the energy transition in a way and manner that will also sustain energy security for the global. I think we see a very new situation in our country, in our environment. And as we transit to the next level, which is probably using gas as the transition fuel of choice globally, that's everybody accept this, and probably there's no better place than being in Nigeria today with the clear fiscal environment, more transparency, more accountability, sanctity of contract ensured, and of course, more importantly, the world needs the gas to move on.
And I was at the World Petroleum Congress, which is ongoing in the United States. Well, back here in Nigeria on Tuesday, President Muhammadu Buhari saw the consideration and approval of the Senate for the Finance Bill 2021. The president hinged his request on the fact that the Finance Bill 2021 seeks to support the implementation of the 2022 budget by proposing key reforms to specific taxation, customs, excise, fiscal, and other relevant laws. Well, we want to know more about this. We have Mr. Ayo Dejebo. He's the head retail investment at Chapel Hill Denham to explain the relevance of this 2021 finance bill and how it pertains to the budget and other related issues. Good to speak with you, Mr. Abel. Good morning.
Good morning, and thanks for having me.
So let's help us to understand. Let's start from the scratch. Now, help us to understand this finance bill and what it offers Nigerians.
Okay, thank you. The finance bill is like a law that guides the tax and the duties that are being charged by the government. So for most government, what the role it plays, it's the support in terms of revenue generation, to bridge the revenue generation gap in the budget. So the budget that has been proposed, a part of it would have been premised on projected assumptions. So on a yearly basis, I think for Nigeria, this is the third year consecutively that we're introducing the Finance Act after submitting the budget. So it helps to, what we see is adjustments in taxes to either meet up to help increase revenue, and also when there are critical sectors in line with the macroeconomic realities, we also see some adjustments. If they want to, if the government wants to support a particular sector, you see taxes being changed to favor that sector, and if they also feel that they need to increase revenue to support the budget, you will also see that increase. So, for instance, if you see in the last 2 years, it was the Finance Act that also put into law the increase in VAT. So I believe that this is commendable because before the last 3 years, the Finance Act that we're using was really stale, and it was really was not relevant to current reality. So by and large, it's a law that guides and helps to know what we should expect within the business environment.
Okay, so does it mean that there's supposed to be a finance bill or act every year to suit the budgets? Will there have to be an amendment every year to, suit the requirement in the business space or the government space?
Yeah, you are very correct. In other climes, it should be every year because it helps to, the government will look at the current reality and try to adjust whether in favor or on the other hand, to see how they can support businesses, support critical sectors, as well as increase revenue. So it's always in line with the budget. So it's something that should be published every year so that most of our tax laws or most of our charges are relevant to current reality. So when you look at, for instance, last year we had um, COVID-19, which impacted on us. And part of what they are looking at this year, that virus exposed there's a law in the Finance Responsibility Act that says you can only borrow for capital expenditure. So now they are proposing a change that would reflect that you can borrow for any natural major impacts, or what I would say, any major reforms in the economy that is required, and not just capital expenditure. So you can see that relevance, such that if there's any major shock on the Nigerian economy, they will be able to raise funds to support that particular task.
Okay, it's interesting that you brought up, the fact that the bill also will now make provision for borrowing for maybe natural disaster, and things like that to help cushion the effect. But what we see more is the issue of tax, and charges. And so it will come natural for Nigerians to say, is it possible to see maybe 2022 finance bill reduce the tax, or will it always, be on the high side? Is it possible to see it come down?
Yes, I think it's possible to see it come down. And one of the laws that have been proposed, or that have been proposed in the 2021 Act, is like there's the reduction in minimum tax. So when you look at minimum tax is charged when company does not make a profit, and what they are proposing is to reduce it from 0.5% to 0.25%, so that your tax liability does not just continue to accumulate while you are not making profit. That also excludes franked investment. Investment are those are income that you earn from companies that you have invested in, and those income in terms of dividend have already been taxed by those companies before payment of dividend is being done. So it can be either ways. We saw even last year that for the SMEs, in terms of capping, excluding SMEs that have turnover, if I can still recall the figure, I think about 50 million and below, excluding them from paying tax. So what it does is government will look at the current macroeconomic environment, will also look at, based on their fiscal policy in terms of which sector do we want to drive, can we exempt, can we reduce their tax within that space. So it's not all the time that it leads to increase in tax, and it can be either ways.
So who contributes to this? Is it just the government? Is it just within the public sector? Does the private sector have input in this before it now goes for, assent and all that?
Yes, I believe that the government has been working closely with private sector, and their contribution would have also been sought. And I feel that also based on the following due process, there would also have been like an open hearing where people would also make suggestions. So I know it's going to have involved both private sector and the public sector, because most of the taxes also comes from the private sector. So there's a need to also hear from them before it's enacted, to know what impact it would have on them if it finally passed.
So based on some of the amendments, capital gain tax of 5% will be applicable on disposable of shares above 500 million naira. Could you expatiate on these proposed changes?
Okay, thanks. I would see this particular act like a progressive tax, so trying to tax the rich. So what it's simply saying is that if you sell proceed of your shares is up to 500 million and above, it will be subject to a tax of 5%. If you don't reinvest it in any Nigerian company within that year. So if you sell your shares today and you booked profits, and the value of the sales proceeds is above 500 million, it means that you're expected to remit 5% to the government. But if it's below 500 million, then you would not be paying tax. Also, part of what has been introduced within that particular act is that this excludes securities lending, and which also supports what the Nigerian exchange is also trying to do, to see how they can increase activity within the securities lending space. So for me, in my view, I believe that this would be positive, would try to retain investment within the Nigerian space, because part of what that particular act is saying, that if you don't reinvest in Nigerian companies and maybe you decide to reinvest offshore, it means that you would pay tax on that. And if you are reinvesting just a part of it, you would also just pay tax to that based on the proportion of what you are not reinvesting. So by and large, it requires planning, and that's part of what it does. It requires planning to know when to sell, and when you are selling, to know the implication. And if you know that you will also be bearing like a 5% tax, you need to look at what's the ROI, that your return on investment on that particular stock that you are trying to sell. So it's really very interesting times, and it's good that a lot of people are aware, so that at the end of the day, you don't also make a loss on your investment.
Yeah, and I think it engages more minds when it comes to that space. Well, another interesting one is lottery and gaming business that may become taxable under this new act.
Okay, yes. That when you look at that sector, based on statistics, is the size is about $90 billion. And what government is looking at is that when you look about, based on the data, about 60 million Nigerians between the age of 15 and 40 years participate within that space, and their contribution to tax has been really very low. So now, seeing how that sector has grown significantly, they are also trying to see how they can sweat that sector in terms of getting uh, a part of the revenue or the income within that space. So I mentioned during the introduction that part of what government also looks at is they've seen that they need to bridge their reduce the budget deficit or to meet a certain revenue target. So they look at sectors that are doing well and are not contributing significantly to to tax. So yes, for the populace, that would seem like yes, there's an increase in what they will pay, or for the companies that are operating within that space, it will reduce their revenue within that particular amount. But I feel that government has allowed this particular sector to grow or stabilize to a development level, and taxing them now, I feel that there's really nothing wrong, though the tax rate has not been fixed, and that's is when we see that the rate that we can also speak more on that particular act.
And we also see that FIRS will be empowered to assess company income tax on turnover of foreign digital companies. Will this not discourage new foreign companies who are planning to come into the Nigerian space?
Okay, thanks. Looking at this particular act, I think it's really a very complex one in terms of implementation. So based on my little understanding of what goes on within the telco sector, so they are trying to tax like companies that provide interconnect activities. They are not domiciled here in Nigeria, and how do you also determine how, in terms of revenue, are booked around when the calls move from one country to the other? So it's really going to be very complex to implement, and there will be need to provide a lot of clarity on how that should be done. So beyond just fixing a particular rate in terms of collecting company income tax, there needs to be clarity so that companies can prepare ahead. They can look at the implication on their business, look at the visibility and how it will impact, so that they know whether to engage in such activity or not, because the tax has implications. CITs are 30%. So if I have to bear about 30% of that income at the end of the day, is it worth going into that business? So that is a very technical and complex law that is being introduced, but there will be need to be maybe NCC and maybe the parastatals around guiding the digital space would also need to provide clarity or work with government within on this particular act.
Okay, so that also brings to mind the question of even before now, we talk about the mechanism available to collect tax, you know, for federal and for state government. Now, with all of this that look, very impressive, especially, when you talk about the 5% of 500 million and all that, do we have both the personnel and the equipment, to follow through with these interesting amendments that have been brought to actually implement them and so that we can see the benefits?
Okay, thanks. I think to a large extent, we've seen a bit of improvement in terms of digitalizing the collection of taxes. You see now that you can view, even for payee, you can view what your company is paying, and you can easily get your tax clearance, and you can see the records. And also for companies, most it's also done digitally. Well, and in terms of follow-up, we know that, in Nigeria, the our major challenge is not policy formation, it's implementation. So I would say that for some of these policies, implementation is always a challenge because beyond just putting it, making that adjustment in the Finance Act, there also needs to be clarity in terms of implementation so that the tax professionals, the companies, they are aware and they can prepare ahead. So if you just set something and just put a rate, or you are just including a particular sector in the tax net, then and you are not providing clarity, there will be a lot of back and forth with tax professionals when they visit companies, and as a result, it discourages investment because it can lead to double taxation for companies.
Exactly, exactly. Thank you so much, Mr. Ayodejibo. And like you said, interesting times for tax professionals and people in the finance space. But of course, it looks like the government also has a lot of work to do when it comes to enlightenment, you know, to bring this to people's doorstep and get them ready for a new season in the 2021 Finance Act. Thank you so much and enjoy your weekend.
Oh, thanks, and thanks for having me.
So we'll take a break now. After the break, there's been a drop in the number of internet subscription now at a time when the world is going virtual. What could be the cause? Find out on Business Morning after the break. You're welcome to the Nigerian Communications Commission. The total number of internet subscriptions in Nigeria has dropped by 12.59 million in 1 year. Subscription was at 152.93 million in October 2020, but fell to 140.34 million in October 2021. What has caused this, and what implication does it have on the Nigerian economy? We have Chris Waje, he's Chair, Mobile Software Solutions Limited, to speak his mind on this. Good to speak to you, Mr. Waje. Good morning. Okay, I think we're having a little bit of a technical hitch with Mr. Waje there, but I'm sure we'll get to him. We'll get him shortly. Well, like the figures indicate, last year, which was a pandemic year, perhaps because a lot of people were at home, so everyone had to turn to the internet and subscribe and all that. But it's not really a pleasant thing when it comes to Nigeria because, like we see, the world has gone virtual. We have meetings virtually now. Yesterday we talked about business online. So it is actually a necessity and no longer a luxury, you know, life online and doing e-commerce and all that. But I think we have Mr. Waje now. Mr. Waje, good morning.
Good morning, Nene. How are you?
Great.
Thank you for having me.
Good to have you on the show. So the NCC has announced that there's been a drop, a 12.59 million drop from October last year to October this year. And we're just wondering, what do you think caused this?
Thank you very much. I think the issue is about digital transformation. And of course, the equation is now being amplified by the COVID-19 pandemic. One should not underestimate that factor of COVID-19 that has caused a lot of trauma across the world. And of course, a lot of people, you know, are almost in penury. So income has dropped. Pandemic really crashed the stock exchange houses all over the planet. So one can expect the inability to be able to get into the train of digital transformation. Though palliatives have been given here and there, but I want to believe that when you look at the influx of people who intend to belong, but without the ability to get there, then automatically we can begin to see the causes of all these things. So the question to ask is, what are the solutions? We have to look beyond the causes and let's attempt to galvanize and have another conversation on the solutions going forward.
Yeah, it would be good, but let's understand when you say the income, so we're looking at the impact of COVID on liquidity or businesses, which is that is what you attribute to this drop in income. So people do not have the funds to subscribe. Is that what you're saying? Just want to be sure.
No, really, if you look at the baseline of the statistics from the Nigerian Bureau of Statistics, you will see that employment, has dropped. All right, you have unemployment figures now that let's take underemployment, as it were. Unemployment is about 23.1, and underemployment is ranging to 40.2%. And of course, we know that there are kids that are really out of school at about 13.1 million people. So if you take all these statistics together as a bouquet, it's a troublesome scenario. And of course, within that confluence of trouble, you cannot really sift out those who will be able to engage because the means are not there. But then we also know, if we look at the remittances from the Nigerians in diaspora, which has also not significantly increased based on what it used to be before, though the exchange rate, has dropped significantly. And that is the dollar to pounds thing has increased and almost. But if you look at the statistical level and you look at the people, and you find out that really it is the ecosystem of extended family that is driving the post-COVID issue, then you begin to see the real fact that is staring us in the face, that we are not yet there in terms of having the economy straightened out to be able to benefit everybody. Because as we speak, we know that there are thousands of children that are born per minute in Nigeria, and that's not a joke, all right? So I think you look at all these parameters and you begin to see why that level has dropped.
Well, that's really worrying, Mr. Wajay, because when we talk of solution for that, then it's we have to look at a whole lot of things when you talk about a drop in income, employment. These are major economic issues which we have been discussing for a while. So, do you see a quick fix, a short-term solution to this?
Thank you very much. I was privileged to be as a resource person at the recent NCC Board of Directors, and they are equally worried. And of course, they are trying to see how they can bring a real sporadic intervention to ensure that those who are left behind, can be brought on board. And especially with the advent of the preparation for the 5G technologies that they want to deploy. So they are looking at having a master plan to be able to have a digital inclusion. Don't forget that we have a digital economy policy and strategy, with the 8 pillars, that are still being navigated. All right, but then you look at how do we fund all these things? How do we create a master plan that the 774 local government, population and citizenry, can benefit? One of those issues they're looking at is the issue of broadband everywhere. Of course, that brings the factor of infrastructure service providers in the IT environment, where licenses have been given, but funding is lacking to some extent. So you're also looking at retooling, because one of the factors that we also seen that has made the income drop and non-accessibility to the internet is that there are a lot of people who have been left behind because there's been a skill latency. They don't have that skill to be in. But there are jobs that are there, business processing, outsourcing jobs are there. There are people who are doing 3G, that is 3 jobs a day on contracting, but then you must have the commensurate skill. So this is failing. So NCC is looking at upskilling, retooling, and even retooling engineers. All right, so because you are looking at not just the digital economy, you are looking at a framework with a master plan of digital transformation that continues. For example, statistics told us or revealed and told us that in 2050, Nigeria is going to be about 410 million people. How are you going to manage infrastructure for water, agriculture, transportation, education? So there has to be a routine, a reimagining of the ecosystem. And that's what NCC Board of Directors, under the chairmanship of Professor Olaoluwa Konde, are doing presently as we speak. And they have gotten even resources from the diaspora that is looking at and concerned about how we can move forward and ensure that those who are left behind can be brought on board. And of course, those who are really not mature to come, the preparation for them will be there. So I think those are some of the issues, is policies, strategic issues. And as we look at 2022, which is an election year, it is very, very synchronous and critical that government need to release more funds to NCC, especially from the 5G, to make sure that they have the capability, to infuse more dynamics into the system and ensure that those strategies will trigger up in creating succor and, of course, employment to those who have been left behind, who are unable to engage. Because, let's face it, it's like you are telling me that those 5-something million are homeless because internet is their home. Most of them are youths. That's where they live. And if they don't have access to that internet, automatically, what we are saying is that these kids are homeless. Are they digitally homeless? Are they knowledge-wise homeless? Are they shelter homeless? So all these factors are put into this. And don't forget that the sink of all these narratives is also showing us at the increase of crime, all right? Increase of kidnapping, increase of this. So they have all the correlation and interlinkages. But we have the assurance of NCC that a lot of things are going to be done across the 774 local governments. A lot of things are going to be done in terms of looking at indigenous software solutions. A lot of things are going to be done in terms of enhancing and encouraging broadband service providers and the network service providers to ensure that everybody are in sync. In a short form, it's just the inclusiveness strategy that has been pursued for digital transformation.
All right,
so that nobody's left out.
All right, Mr. Awaje. Well, to say the truth, those are very laudable strategies. Right? Of course, we have InfraCo already talking about developing skills, upscaling skills, and also encouraging indigenous software solution. But you also mentioned, about the issue of funding, which is at the crux of it, because even with what we have now, I believe we could do even much more, but we still go back to infrastructure. And when you talk about developing infrastructure or boosting infrastructure, then you talk about funding. Does the NCC have a plan to raise funds to meet up with these needs?
Thank you very much. Really, you know that I don't hold brief for NCC, but
yes,
my own opinion is that the NCC structure itself, because the question you asked should have been, can the present structure of NCC, uphold the monumental challenges that we see coming in digital transformation? So that's a holistic answer, all right? Because NCC has existed since 2001. And when you look at the structure, they are still in the same house, in the same building. The manpower, though, has increased a little bit. have the clusters here and there nationwide. But there has to be a mega structure for NCC because that's the backbone for health, backbone for agriculture, backbone for businesses, all right? Backbone for employment. So if you want to enable this, probably the federation account where the network solution providers are being, has to be revisited so that NCC can have better chance to be able to expand. So NCC needs to expand skill-wise, infrastructure-wise, to be able to ensure that they are regulators, they are not developers, so people must understand, right? They want to regulate what is on ground, but then they have overall capacity because the whole thing is getting beyond the conceptual base that everybody knows. So I think those are some of the issues. Partnering will be one of the things with professionals. There has to be new systems, new emerging systems to be able. Regulation has to go digital, all right? It shouldn't be more physical or chasing the shadows or whatever. And I think they are looking at that to ensure that there could be a digitization, that one can bring to bear, as it were, for all these challenges. They won't go away because challenges also the opportunities. Startups are going to come up, innovators are going to come up. And of course, this coming up is going to create some employment. We have seen in the financial sector, in fintech, that at least 3, 4, 5 Nigerian companies are now unicorn. That is over $1 billion. So all right. there is this, within the youth cluster of Nigeria. But then being a unicorn abroad and being a unicorn at home, because it's about the intellectual property of the country that we are concerned about. If the intellectual property of this innovation is resident outside country, then it's a capital flight, all right? And it won't create as much employment at home than it is going to create abroad. So I think those are the things that the issue of local content also needs to be visited, because local content can be an accelerator to bring in those 5 million people back on when they're in different sectors.
All right, thank you so much, Mr. Chris Uwaje, Chair, Mobile Software Solutions Limited. Thank you so much for sharing your thoughts with us this morning on internet subscription drop in Nigeria.
It's my pleasure and my congratulations and happy Christmas to Channels Television that has retained the first TV, in Nigeria, and I think extension the first TV in Africa too.
Thank you so much, Mr. Uwaje. Thank you so much, and enjoy your weekend. Thank you so much for the congratulations. Well, let's just jump into the markets now. Yesterday was a busy day in the fixed income market. The FGM bonds, we saw 15 deals, and the most favored there was the 23rd of February 2028. And the 27th of March was next, 2050, had 4 deals, and the total value of transactions at the FGN bonds yesterday was 7.30 billion naira. I'm going to the Treasury bills now. Treasury bills yesterday too was also busy. It had 18 deals worth 47.51 billion naira. The most favored was the next year, 27th of October 2022, valued at 41.91. Well, we have Dumebi Udegmunam to tell us, I think the market was really busy yesterday. To bring us up to date, Dumebi Udegmunam, fixed income trader at UBA. Hello, Dumebi. Good morning.
Hi, good morning. Thanks for having me.
Good to have you. So bring us up to date on the auction, the NTB auction yesterday.
Well, at the NTB auction, we saw a drop in rates from 589 to 534. We've seen consecutive drop in rates from the past 3 or 4 auctions. We are coming from 7.25 in October, 6.99, 6.5, 5.8 now, 5.34. However, what we could notice there was an increase in subscription. So despite where we are in terms of current liquidity or where we are right now, we still see a large amount of subscription on the NCD side of the market, despite the illiquidity issues that we're currently facing in the market.
So that means the Christmas might look a little bit good since the liquidity issue is not affecting the market so much?
Yeah, the illiquidity might not be affecting the market right now because we're reaching year end and a lot of people are trying to rebalance their books and all that. And however, there's still a lot of funding obligations. We have a retail FX today. We also have a bond auction coming in next week on the 15th. So we still have a large amount of funding obligations and little or no inflows coming in. I mean, total amount of inflows coming in for the month of December is as low as 230 billion compared from what we're coming previous months. So that is a drop in inflows compared to where we're coming from in previous. I think the total that we have maturing in terms of inflow for the month of December is 207 billion. There are no coupon payments, there are no bond maturities. All we have left right now is 112 billion in NT maturities and 195 for the whole month of December. So that's quite low compared to the previous months that passed or compared to Q4. So in as much as, yes, the liquidity is not really playing in terms of the auctions. However, they will still have a large amount of funding obligations to close the year.
Okay, all right. Thank you so much, Dumebi, for bringing us up to date on some happenings in the fixed income market, and enjoy your weekend.
Thank you.
So we'll take a break now. When we come back, we'll do an opening call to London. Juliana is standing by to stay with us. It's Business Morning on Channels Television. It's Friday and it's GDP Day in the UK. We have Juliana joining us now to give us details. Hello, Juliana. Good morning.
Good morning, Annie.
So data suggests that the economy barely grew in October. How did the sectors perform?
Yeah, good morning, Annie. Pretty disappointing data coming out of the UK this morning showing that growth was pretty stagnant at 0.1%. This follows 0.6% growth during the month of September. I suppose the only shining light was the services sector. That grew by 0.6%. So we are now beginning to see the services, which contribute over 80% of British GDP, finally back at what it was pre-pandemic. But this is not consumer-facing services. So this is not the hospitality sector. This is not retail. This is really client services such as the reopening of GP. So people now, rather than having to go online to get a doctor's a consultation, you can go back to see your doctor. So it is quite concerning. We are just 0.5% short where we were before the onset of the pandemic. But of course, because of the Omicron variant, and from Monday, the fact that millions of Brits are going to be working from home, this is really raising concern about the strength of Britain's pandemic recovery.
Yeah, and talking about the pandemic, more reactions are still following the Omicron Plan B. One of it is that it may delay the rise in UK interest rates. How so?
Well, yes, that's a major concern. We know that at the moment inflation is trending way above what the Bank of England would like at 2%. Next week, Thursday, 16th of December, the Monetary Policy Committee gather in Thread Needle Street. And this time last week, or has it been about 2 weeks now since Omicron was discovered, I think there were hedge-on bets that yes, there would be a rise from the historic low of 0.1% to about 0.25%. But of course, now there are major concerns about the recovery because of Omicron, because of these new restrictions. Lots of economists now are thinking it's not possible that the Bank of England could tamper with interest rates, even though we know inflation is going to be a major concern because people are not going to be shopping on the high street. They will be shopping online. And if everybody's shopping online, that increases demand. And of course, inflation rises at the back of that. But as you know, a very famous term in business in it. We'll just have to wait and see.
Yeah, we'll keep waiting and seeing. But we'll talk to you later at 1:30 during Business Incorporated, Juliana.
Thanks, Anna.
So let's take a peep to the crypto market. Well, I think Laddie is feeling like a prophet today. Unfortunately for him, there was no bet on it. So, I mean, it's just...
Well, you can always compensate me with something because I said, yes, what's his name was sitting on the line yesterday, Rume, he said he couldn't tell us a direction, and I gave a direction, and yeah, we have it. It's a fully red, really thick red. This Friday, we see Bitcoin losing that 50K range, Ethereum almost losing the 4,000 range at this point. And let's see the fear greed index. It's extreme fear in the market right now at 24 points. So you see traders right now are trying to get on the sidelines if they didn't get caught in that dump there. We see the market cap, $2.26 trillion is down about 4.29%. Let's bring in Michael Inaji now, digital market analyst. Great to have you, Michael. Happy Friday, Red Friday.
Happy Friday, Laddie. How are you?
I'm fine, thank you. Well, I see the U.S. Department of Justice has launched a special task force to, focus on crimes committed on crypto exchanges and other services that serve as avenues for money laundering and other crime. Would you say crypto finally has like a policing right now?
So, yes, I would say that the Department of Justice is trying to actively make an effort to police crypto. And it's going to have to start, and this is the first step. The only thing to consider, though, is that we had over 400 ransomware attacks in the beginning of this year, and only about 50 cases have been brought forward for enforcement action. So there's a big difference between the cases that have been brought forward in terms of getting prosecuted, and also there's been like a lack of cooperation between the crypto entities and the DOJ. So the rationale behind this team is so that you have a specialized unit that whenever you have any like kind of ransomware attacks, you can go out and then have a team that liaisons directly with the exchanges. So you're going to see them focus on anti-money laundering cases. You're going to see them focusing on people who try and manipulate the market, and you're going to see them overall just focus on things that could be overall not healthy for the market. But only 40 cases were brought forward for ransomware attacks, and we've had 400 cases alone of ransomware in this year. So there's a big disparity between the amount of cases being brought forward and the actual crimes that are happening, that are perpetrated through the blockchain. And so this is an attempt to close that gap and have a specialized team. So whenever an exchange isn't following anti-money laundering, AML, KYC laws, or any kind of like they're trying to evade taxes, or they're trying to aid people to evade taxes, this is basically a team to help enforce that. So we finally have gotten a crypto cop, but it's just the beginning.
All right. Well, it's still early days for the crypto market. We'll be watching how regulation and this policing actually plays out. All right. Thank you so much, Michael. Though we have a little audio issue there, but thank you so much, Michael.
Yeah, sorry about that. I'm so sorry about that.
It's fine. It's fine. All right. Enjoy the weekend. All right, now let's look at the top 5 gainers. We see IOTX there, the top gainer there, 11% up. CeeLo there, $3.85. It's up 6%. You see, it's quite a lean top gainer list we have there. Normally, you see 2-digit gains, but we're seeing single-digit gains, and we see a stable coin there, BUSD, also in the top gainer. That tells you that a lot of traders are running into stable coins to avoid being wrecked in this market. Now, we see top 5 losers. We see WAX there. WAX was holding strong for a couple of days now. It's traded about 60 cents. Now it's down 18% this morning. And Tezo still had a good run. It's down 12%. QTUM, CRV, and we see Phantom there at 39. So, it's red. It's red. I don't know what Monday is going to say. It could be green, could be stable, but Friday's red.
Friday's red. I hope we're not back to that Friday red trend.
Yeah, we've had like 3 or 4 now. So the trend might be back, but who knows? It might
no, it's
switch
Christmas.
over again.
It won't be red.
Christmas red.
All right, Laddie, thank you so much. And that's it on the show. Thank you so much for being a part of it. The last one for the week. But next week, we'll start fresh episodes of Business Morning. But do not forget, at 1:30, we'll bring you Business Incorporated, where we'll give you updates from the world of business. Enjoy your weekend. I'm Ini John Mekwa.